Hey guys, it's Gold Rush Live. I know everybody's off today, but I still wanted to come on and I brought a guest with me today. And we've been talking a lot at All Star Charts about aerospace and defense. Everybody's watching the stocks take off and wondering what's going on. So I decided to bring on my buddy who's a geopolitical expert. Dimitri is just a great guy, has a great head on his shoulders, always a fan of his work. So if you guys will see him on my page. I tagged him a bunch of times before this. So definitely give him a follow on Twitter. Check out his work on Substack. He also is working on a lot of other stuff too. So let's bring in Dimitri. This is my friend who's a geopolitical strategist. Great guy. How you doing, Dimitri?
Hey, Jason, great to see you. It's been a long time coming. We do one of these shows. We used to do these like, what is it, once, sometimes as much as twice a month,
Yeah, we were
actually.
doing them all the time. And then, we kind of fell off a little bit. You've been up to a lot of stuff. I've been up to a lot of stuff. I was kind of busy for a month. You're busy. You got a bunch of new work coming up. So I'm so glad to get this going, man. I hit up Dimitri and I totally forgot everybody was off today because I'm terrible at holidays. I always just kind of expect to work straight through. And then Dimitri was like, I'm free. And I was like, oh, I wonder why he's free today. I was like, that's great. We'll do this. And then,
Yeah.
yesterday, everybody was like, hey, are you still doing Gold Rush Live? And I was like, yeah, why not? And they're like, everybody's off. And I was like, oh, yeah, but we're here, man. And I'm excited. I know there's a lot of people watching today. A lot of people wanted to check this out. So we got a great show for you guys today. So, Dimitri, I want to just start out talking about big picture macro. And then we're going to get into the geopolitical picture, the oil picture, and you can also, tie this in any way you want to. But the first thing I want to start out was with this chart of the dollar. So if we're looking at the dollar here, for me, this is something that I've been talking about a bunch lately, which is the dollar cycle. When we look at the dollar cycle, you see that there's these huge peaks and huge troughs over and over and over again in the dollar. And so many people have been trading in this strong dollar cycle, basically that started around 2008. The dollar's kind of just gone up ever since. Yeah, we had brief periods of a falling dollar, but basically it's been in a strong uptrend ever since. Now the dollars kind of gave that false breakout signal, fell down very quickly. What do you think this means to global markets?
Well, yeah, I mean, as far as a weaker dollar goes, that obviously is good for countries that, let's say, want to issue new debt, right? So if they issue their sovereign debt denominated in US dollars, that provides much more favorable conditions. As far as the impact on the local economy, or rather on the domestic economy, the impact is somewhat limited. To the extent that exports constitute a very small portion of our GDP, where our majority consumption driven. So any impact it would have on increasing our trade, as far as its influence on GDP figures would be, it's pretty negligible. Obviously, with a weaker dollar, commodities, by extension become more expensive, right? Because by definition, you have to use more dollars to purchase the same amount of a given commodity, whether it's gold, oil, or et cetera. Oil is an interesting example in this one. I can get into that a little bit later. In terms of recent dollar price action, what I think is really interesting, right, is that at the last FOMC meeting, um, gosh, what was it, yesterday?
Yep.
Yeah.
Holidays,
So
man. They mess us all
yeah,
up.
I know, really throws things off. For some reason, I thought it may have been the day before. But at the FOMC meeting, Powell, it's what is it, the fourth time they've held interest rates steady. They've paused it, and we saw, what is it, core PCE data tick up higher. And what's really interesting is that you saw him cite tariffs and geopolitical uncertainty as um, being big influencers in driving monetary policy, which isn't really something that you hear that often, right? Usually it has to do with more domestic problems. But more recently, you've seen how the geopolitical premium is impacting monetary policy, it's impacting fiscal policy. If you look at, industrial policy specifically, whether it's supporting domestic industries or tariffs, which are a form of industrial policy, it is having an asymmetric effect on markets and the economy, and therefore, by extension, the Federal Reserve. So I don't think you're going to see the last of it. As for dollar price action, I think it's really predicated on where people think the Fed is going. And if we see prolonged uncertainty with tariffs, right? Because with tariffs, it's really interesting if you compare Trump's second term with his first. With his first term, he actually imposed the tariffs, but as far as I understand it, no actual tariffs have actually been imposed so far in his second term. Or if they have, there have been very few. It's mostly been these periods of threat, negotiation for a pause, and businesses have a very difficult time orienting around that because if you at least know where you're at, i.e., let's say you have really high tariffs, you can plan your business around that. It's not optimal, but at least there's some certainty. It's better, more succinct way to put it is it's better to know the hell you're in than the hell you don't know you're in, right?
Yep.
Because then you can navigate all those terrains. But if you're a business and you don't know if tariffs are going to go up, that then limits expansion. That then kind of just freezes all of your activity. And that's not just in manufacturing. You're seeing it in the services industry. You're seeing it in the tech sector still, right? And that's not just a function of AI. That also has to do with credit conditions, which are tied to these tariffs and the uncertainty around it. So as far as dollar price action goes, I think a lot of it, tying this all together vis-a-vis Fed policy is going to be tied to geopolitics, especially if energy prices go up. And, that's something we can discuss up next.
Yeah, I think you're spot on, and that's kind of why I wanted to bring you on today. We look at the charts here, we look at the price action, we're trading those, but what's going on behind the surface? And that's the thing that we really need some help on. So, you're really kind of nailing it here. So let's just hop into oil now because we were talking about getting to this later. I know everybody's going to want to get to it immediately. So here's oil. Here's a chart of oil. If you look at this false breakdown signal that happened, we ended up getting long here. Then basically all of the geopolitics just kicked up and took this thing up. What was it, 8% the one day?
Yeah.
And then moved up another 2% the next day and so on. So we're kind of up here. We're heading towards a new 52-week high. So what's going on in the background here? Because if we're looking at Iran, this whole situation with Israel, Iran kind of got out of control pretty quickly. There was already a threat of it, and a lot of people knew it was going to happen at some point. And it was literally, what was it, 61 days after they were told to negotiate with Trump, and then next thing you know, they're getting bombed. So, what do you think about this whole situation? We can start all the way back. You were talking recently about a regime change in that area. So let's talk about that a little bit. So, what are you seeing there? Do you think this is a situation that's going to continue? Do you think it will continue to drive the price of oil higher?
Yeah, I mean, so as for oil prices, my forecasts for the past several months have been that even before Trump was elected, or especially right after he was, my conviction was even more solid, which was that the growth hampering effects of tariffs would dampen oil price activity, which of course would make sense. It's a cyclically sensitive asset and moves with growth trends. And, as a geopolitical strategist, obviously I look at what are some of the political risks on the international scene and how could they potentially affect commodity prices or various securities. And with oil prices, my thinking behind it was, well, okay, what's that Mark Twain quote? History doesn't repeat, but it sure does rhyme.
Yep.
We saw escalated tensions with Iran, right, and the U.S. and Israel during Trump's first term. We had those drone strikes against those tankers, and we had just general disrupt. Sorry, we had drone strikes, and then we had attacks on tankers, two separate things. But either way, they were related to oil prices, and surely enough, oil prices rose. Right, you had the attack on a Saudi Aramco facility, and that caused the biggest one-day jump in oil prices, I think, on record. The chart is pretty insane. But the main takeaway there was, oh, interesting, crude oil prices kept falling. Why? Well, it's because the growth outlook hadn't fundamentally changed. What had changed briefly was a supply disruption, but also equally as important, an elevation of supply risk disruption fears. Markets don't always necessarily react to the facts. They are forward-looking, so they can react to anticipations of things. To this extent, I think you're seeing the same thing here. Oil prices are what? Up 20% in the past 8 days or so. That's obviously not sustainable, and that's insane. But that's also as a function of the increased military action in the Middle East, right? So it's based off of those fears. Now, pardon me, a big concern that people have, and I think it has more merit to be legitimately concerned about it more so than before, is closing the Strait of Hormuz. Now, in the past, Iran has always threatened this, and there's been no follow through, which is why whenever they did it, markets didn't care. right? They just rolled their eyes and said, "Okay, great, yeah, you're just the boy who cried wolf."
Yep.
But if you look at the Iran then, and you look at the Iran now, very different. You have your missile defense systems taken out. You have all of the heads of your proxies in the region decapitated. Your military leadership is also getting taken out. There is domestic unrest and have been periods and fluctuations of it with increasing frequency in the country. You have a population that is subdued by a 10% very heavily armed force, IRGC, but the other 90% don't want this. They are by and large, a secular opposition. So if I were Iran and I am beginning to feel pressure from the inside and on the outside, and I feel like there's no way out, I mean, if you're going to go down, might as well go down swinging, because if you're going to die, you might as well try to inflict as much pain as possible going down. So to that extent, given the circumstances now versus before, even though I think the risk of the Strait of Hormuz is closing is relatively small, it is not negligible. And I think the current geopolitical conditions make it a higher risk. To the extent that markets take it seriously, I don't think they are at this moment. That's fair and it makes sense. Because if they really did think it was going to close, oil prices, in my view, would be up another 10, 15%. And I would love to get your thoughts on that. But that's the sort of context of where we're at right now. And back in December, it was December 2nd, incidentally, I actually published this on my birthday, but I published a piece called "Is Regime Change in Iran More Likely Than Not Between Now and 2029?" And in my view, the answer is yes, because you have several conditions. One, you have, and I already alluded to them earlier, one, you have weakened, domestic instability, you have high government penetration by Mossad, you have military leaders taken out, and you have hegemonic support. Now, in this case, it's Trump. Now, this part was interesting because initially I thought Trump would unconditionally support Israel. U.S.-Israeli policy has been pretty coordinated in that respect, so it would seem weird that there would be a deviation. And then we saw Trump actually really get quite frustrated with Netanyahu a couple of weeks ago, and we were scheduled to have negotiations with the Iranians, and then Israel started its bombing campaign, so that completely derailed it. So to that extent, I think that now that Trump is returning saying, well, we may consider taking out Khamenei, we may actually start, officially participating in this war, that marks a massive pivot, but is still in line with my forecast. And a lot of the reason why Israel is pushing so hard in this fragile window is because they have expended an enormous amount of both physical and political capital during the war. Obviously, the war in Gaza has made them tremendously unpopular, and regardless of what you may think about it, the reality of it is that they're thinking, okay, if we stop now and we allow them to rearm, they're just going to do this again, except we'll have less political wiggle room. And I'm not saying I support or don't support this policy. And in fact, I don't have any subjective opinions on this. My only role is to provide an objective analysis according to what each party may view as a strategic priority. Therefore, if I was Israel in this instance, I would keep pushing, because if you are just that close, why would then you stop, essentially? The strategic value of that is way too big to pass up. In my view, I think that when Trump is talking about negotiating with the Iranians, I think the reason why, and this is like a little bit of a hot take, but my take is that they actually are not interested. Because if they were to outright say, okay, yes, we are officially doing regime change, we're going to take you out, that could then lead the Iranian regime to do something radical. But if you keep them subdued with the prospect, potentially, of some sort of negotiation, then that placates them from doing something extreme that could then hurt oil prices, that could then hurt, the economy, not just in the US, but globally. So that's my sort of take on what's happening in the Middle East vis-a-vis Israel and Iran, and why I think Israel is going to push for it, because the conditions for that are so ripe. And let's face it, even though they have no official policy of regime change, they have an unofficial one, and they've been working towards it. And from a strategic perspective, I don't blame them. As for the other Arab countries surrounding them, I don't blame them either for unofficially wanting it, but not wanting to be directly involved in it, lest they incur the wrath of Iran's proxies.
Yeah. And a lot of people in the United States, we were talking about this on the phone today. A lot of people don't believe things like this happen. But if we look at history, I mean, really, it was until, what was the name of the book? Confessions of an Economic Hitman.
Great book.
Yeah, great book. If you guys want to learn more about geopolitics, that's one to read. But basically, the Iran situation happened all the way in the 50s with Mohammad Mossadegh, and there was tons. I mean, I'm sure I have one.
53. Yeah.
Yeah, so you're looking at the CIA documents actually came out, years later, naming Kermit Roosevelt. Um, Basically, he went in there, and instead of them sending an army for once, they basically sent an economic hitman to destabilize the region and make them all kind of go against Mohammad Mossadegh, and then install someone who is more don't know the right way to say it. Don't want to get pulled off the internet, but basically they were more in line with what the United States wanted at that time. So they installed this Shah as brutal dictator, and Iran's kind of been a little bit of a mess ever since. And so this would be an interesting time to see another shift. And it's kind of worked the same way again. I don't know if there's the same forces involved, but there's so much economic destabilization in the area. And now we're here, and now you're saying exactly what you're saying. So I do think that that's a very big possibility that a lot of people are just going to kind of overlook right now.
Yeah, and to your point, right? So it's like the reason why Mossadegh was overthrown is because he nationalized the oil facilities. There initially, MI6 wanted to go in, the CIA didn't want to, but then they agreed to. They then fomented dissent, and then you had the Shah come in. And obviously, the Savak were very brutal, and then that fomented a kind of resentment that then led to the rise of Khomeini and the Iranian Revolution in 1979. And it was kind of ironic, too. It's kind of off topic, but Khomeini actually briefly fled to France and was actually visited by Michel Foucault, who is a postmodernist with a lifestyle that was fundamentally incompatible with the Shah. So there was some really weird intellectual stuff going on around there, too. Not the Shah, pardon me, Khomeini, who was exiled. But anyways, the Ayatollah. But anyways, that's neither here nor there. As for the outlook, like I said, everything that I laid out back in December is playing out now. And the same catalysts that are there are the only plausible explanation for why Israel continues to push. Because even though Israel and the US are very closely aligned, isn't it interesting that Trump explicitly has said repeatedly, we do not want a war, we do not want to get involved, yet Israel's continue to act on it. Now, they're their own state, they have their own foreign policy, that's fine, but the US and Israel do generally move very closely together. The fact that they're going outright against Trump, in my view, indicates that they view this strategic window as so important that it is worth potentially upsetting that bilateral relationship. Precisely because there's, again, not going to be any other better window. Because if they were to wait, allow Iran to, let's say, rearm, allow them to regroup all their proxies and fortify their positions, then that makes the situation difficult. Because look at the surrounding areas. If you take out Iran, then Hezbollah, by and large, loses a lot of its backing. Syria is currently fragmented. It's not as bad as before, but it's still fragmented. And if you also take out Iran, then you take out what I think what some of these people have called, these analysts, the Shia crescent, right? And obviously there's a lot of big tension there. So with everything aligned as it is regionally, I don't see why Israel would back off. And again, given the circumstances, given the US priority and the Israeli priority and all the conditions that I mentioned earlier, it really does increasingly seem more likely than not that there's going to be regime change in Iran even sooner than expected. Also because the exiled Shah's son has been making more and more public appearances and videos saying we have a transitional government idea already in place. We have a step for the first 100 days. They are outright coming out and saying we have a plan for this, meaning we have contingencies. And I'm not saying it's good or bad. I am just saying here are all the signs of it that seems to increasingly point to it. Because then imagine what a wasted almost opportunity from an Israeli perspective it would be if you had all these stars aligned, you had all this publicity, and then they go, okay, but we're just going to negotiate. It just seems like it would be very counterintuitive to that momentum.
Yeah, and they have all the momentum right now. They're kind of in that zone where I would be surprised to see anything de-escalate here from them. It would have to be something that somebody else came into this. Whether it's the United States, whether it's Russia, China, somebody else would have to come into this to de-escalate the situation. I don't think they're going to do it. I think they've been going full war ever since last October.
Well, I mean, another consideration too is that there is potentially a strategic U.S. interest in destabilizing Iran too, to the extent, but it's two different ways. Israel, for instance, would likely prefer a fragmented Iran that can't form a cohesive threat, versus the U.S. would prefer a more stable, cohesive Iran. Because if it gets fragmented, we've obviously seen past precedent for that and how it could lead to even more regional and post-regional problems, right? Like we saw the creation of ISIS and the power vacuum in the Middle East end up affecting people all over Europe. So there is precedent for that. But yeah, my take on it is that again, I can see crude oil prices reacting pretty violently to this if we continue to see more regime change catalysts and signs that are pointing to that. But again, I think that'll be, in the grand scheme of things, very temporary because again, they'll only fundamentally go to what the growth outlook is. Though they crude oil prices follow demand over the long term, and in my view, they appear to follow supply concerns and risks very, what's the word I'm looking for? Very violently, but very shortly.
Yes,
Like
and
they
that's what.
react to it in a very volatile way, but ultimately they go where the demand is. And if the growth outlook, from the IMF, I think they published something recently saying that they revised down world growth for the U.S. and the world globally, but not Asia. Interestingly enough, I think Asia was actually doing okay. They cited tariffs and they cited all this uncertainty. So crude oil prices again may rise on elevated supply risks, but ultimately they follow where the growth prospects are. If the growth prospects are dim, that's where they're going to go, more likely than not.
And this is one thing I brought up about the oil price, which is it's just an old trading tactic that Bruce Kovner came up with many years ago. I mean, he didn't come up with it. I'm sure he learned it from someone else, but he said it in the first Market Wizards, which is he's talking about breakouts, and he said the breakouts that happen on no news, those are the best ones. Those are the ones
Mm.
that usually rally. Think about gold 2024. Gold starts to break out. Nobody's talking about it. Nobody even cares. Everybody, even in the uptrend, I mean, just as it started, was like it's going to stop, it's going to fade, and it just continued until finally now it's on the cover of magazines and so on. But it wasn't. Nobody covered it at all. And now we have the opposite situation here. This false breakdown signal on the chart right here is a false breakdown signal that is very news related. And like you said, I love that you brought that up because it reminds me of 2019. The oil price, I don't remember what exactly happened. It was something with Saudi Arabia. I think it was December or January 2019. And you
Mhm.
basically not it's either December 2019 or January 2020. And you see this huge breakout in oil. So it basically was stuck in a range all year long. If you remember 2018, the oil price came all the way down to $40. Then it just went sideways for a long period of time. Next thing you know, it finally breaks out on this huge news related thing. And then it just fades right there. It just faded all the way back to, and that's when it went all the way to negative. So it was like it faded from the top end, it went out of the top end of the range, came all the way back down to the bottom end of the range, broke down and just continued down till it was, the front month contract went negative. And so it's like, this is what I want to continue to watch here. One, I think the oil price is a little bit too low, considering what's going on globally and the relative value of it. But at the same time, like you said, it's something that you always have to keep in mind, which is oil is a demand driven product. If people aren't using oil, if people aren't driving, if there's not as much transportation, if these things aren't happening, you don't get the oil price that's going to just explode. The only type of environment where that can happen, and there's a possibility of this happening, which is a stagflationary environment. But I do think that what's interesting here is that globally we are seeing some upticks, like you mentioned. When we look at global growth, global GDP numbers, even projections for the year, you're seeing emerging markets are outperforming domestic markets in growth, which is something that we haven't seen in many years. So now that that's kind of happening, it might be a situation where you could see some weird shifts happening that really don't make as much sense. So it's just something to keep in mind. But here for me, it's like I really want to see if we have enough juice to kind of get a new 52-week high in oil. If we kind of hit that new 52-week high, I'd be a little bit more bullish on it. I don't like seeing things move on a ton of news. I love seeing things move with no news. So it's kind of like irking me a little bit, but at the same time, take the signal. It's still a trade. Let's see where it goes. So let's end off here, with we're going to do countries, then we'll get into gold a little bit for you guys. I know you guys are here to talk about gold most of the time. That's coming up in a second. But something that's been very important, and you guys know me, I cover everything. I'm a futures trader. I trade all over the world every single day. There's nothing that isn't in my portfolio or off limits for me to trade. So if we're looking at this, what is going on with international leadership? I wanted to ask you that question. I'm long, I'm too long. I'm looking at my portfolio and I'm like, I literally have Poland, I have half of Europe, I have Asia. I'm looking at South America. I've got South American stocks, Mexico, Canada, like these things are all moving and they're outperforming the United States by quite a bit. So, what are you thinking about this whole situation? You think it's just a response to the weak dollar, or do you think it's something else?
I don't know. In short, I have some thoughts and ideas behind it. So one big one is European defense. That really had a lot of headlines back in, I'd probably say what, like March, I would
Yeah.
say, maybe March, April. That's when we had the German government talking about how they're going to make a constitutional change to their budget. Now, for those of you who are not familiar with European politics, if the Germans say we're going to make a constitutional change to our budget, things are serious. And the reason why is because their yield on their sovereign debt is structurally lower than all of their Mediterranean counterparts. That's not an accident. Part of that has to do with their budget structure. So the fact that they said that they're willing to change that and they want to use some of that for military spending, that's huge, right? So there's a geopolitical driver there. I know UK defense contracting stocks are rising as well. I know German and French were the big ones. I can't speak to the other ones. So that's just within a certain subsector. As I understand it, some European banks were also outperforming their US counterparts, if memory serves, but the
Yep.
timeline for that may have been a little bit before. That may have been more of a 2023 phenomenon, I believe, but I don't have the exact time right.
No, it's still going
Just for
on.
the
Still going
Okay,
on.
is it still going on?
It,
Yeah. So
it
yeah,
blows my mind every day. If you look at a European bank charts, you're just like, man, I haven't seen that thing move in so many years. Like it's wild to see that.
yeah. I mean, my focus, like in terms of my portfolio, it's deeply concentrated in the U.S., specifically within tech. It's not investment advice, but the reason why I may not be able to comment so much on international stocks is because I'm just not frequently looking at them as much. Even though clearly, like based on your analysis and the chart you have here, it certainly merits it. Brazil was a country that I was interested in a while back. I think vis-a-vis the energy transition, they're at an interesting point.
Yeah.
Still a heavy commodity element there. The domestic political situation there is highly volatile. I mean, if you look at who their presidents are between Bolsonaro and Lula, I mean, it's just opposite ends of the spectrum, and that's not an exception. That's the norm. So that kind of domestic political volatility was a bit of a always a bit of a turnoff for me. But I'd love to hear about what are some of the international stocks or even sovereign bonds potentially that you're looking at.
Yeah, I mean, for me, I'm still just it seems like it's very concentrated. The great because everybody will look at it and go, "Oh, is it China? EEM? What should I buy?" And it's like everything is kind of moving. If you're looking at Southeast
Yeah.
Asia, that's taking off. Vietnam looks really good all the way. Even China looks good. South Korea looks great. All
Mhm.
these things are just moving like crazy. I mean, South Africa is moving, and they're all in uptrends, and they're all massively outperforming the United States at the moment. And that's kind of to me where I really get into things, which is my models are all really based on relative strength. It helps me figure out what regime we're in, where money's actually flowing to, and then I look at the positioning and go from there. And then when the signals match up, you do it. But the signals have matched up across the board. Like this is the craziest thing I've ever seen in international. And people always talk to me because I've always traded international stocks, even in the bad years. 2019, it was Russia outperformed the United States. Greece outperformed the. It was I think Greece was actually the best performing country that year, which is pretty interesting. You would never think.
Yeah,
But
yeah, that's
2019
strange.
it was, yeah, very strange. Russia is even stranger because at the time it was known as a oil based country. It was a commodity based country, and then the commodities weren't moving at all. And next thing you know, Russia is the leader. So there's always a place to be, but this is a situation where it's like, oh, signal here, oh, signal there, oh, now Canada's moving, oh, Mexico's moving too. All of South America, you could buy the ILF, which I haven't heard people talk about, which is the South American ETF. I haven't heard people
Hmm.
talk about that in at least 10 years. So people are now talking about that one. And it's just like, okay, so you can go basically from Africa, South America, Asia, and then, like you said, Europe is taking off. Europe is taking off. Who has said that in the last? I don't know. It's been a long time since I've ever.
Decade?
Yeah,
Yeah.
it's been a long time since I've said, "Hey, I'm long Germany." I've been long Germany all year long. And the move really started last year. China kind of started to move, kind of took off, made a new 52-week high, continued to move higher, consolidated a bit. Now it's finally moving higher again. So it's like you kind of see these things take off, and you really just want to know, like, hey, I'm in the strongest places in this market. That's all you got to do. You don't have to think, oh, is this going to last the rest of the year? Is this going to do this? And I'm just talking to you guys who are trading. Try to just think about it, like taking the trades one at a time, seeing where they go. I don't know if international leadership lasts 10 years like it has in the past. I don't know if it lasts to the end of the year, but either way, like you can make a lot of money in this quarter, next quarter, and so on by just following the relative strength at the moment. And so let's also hit on before we have to go gold, silver. So geopolitics are always something to do with gold and silver, especially gold. And really, gold loves uncertainty. And that's the one thing that people, really, I try to hit home with people a lot of the time. It's like when the markets are in a place where there's so much confusion, so much volatility, global strife, global turmoil, people turn to gold. And it's always been like that. So, what are you seeing in the gold market? Got any thoughts on silver, where this thing ends up? Do you think it's long in the tooth at the moment? Do you think central banks are still buying it? I want to hear your actual sense of it, looking at geopolitics.
For sure. So I can't speak to silver, but as for gold, there's some interesting movement there. So people talk about how central banks are buying up gold because some of their faith is being eroded in the US dollar. That's sometimes then used, in my view, rather misleadingly to say that dollar usage is going down. It's actually not. Swift bank data actually showed that dollar usage in global transactions is rising. But central banks are diversifying what their reserves are. They are pouring more into gold. China was a really big one. They were driving a lot of gold price action. Another really interesting one was back in, this is in China too. Certain companies have, just capital they have laying around to invest at their discretion. And but within that, there are very strict rules about what they can and can't invest in, right? Because they're not like primary investment banks. These are just like big insurance companies, for instance. But instead, what they do, or instead, rather, what happened is China said, "Hey, listen, you can use 10% of your holdings to invest into gold or certain other kinds of assets." In other words, what China said from a market perspective was, "Hey, I'm going to allow a lot of government-backed institutions, right? 40%, no, yeah, 40 to 50% of all companies in China are state-owned enterprises. I'm going to let you, a government-backed entity, use some of your reserve capital to buy gold." In other words, what the market heard was, "Oh, great. Tens of billions of dollars of capital are potentially going to be freed up that can go into gold." So that's another bullish tailwind, along with increasing central bank purchases. As to your point earlier, gold in many ways is an anti-inflation hedge. I would say more so than an anti-risk asset, and that's because if you overlay gold prices with the S&P back in like 2008, they actually both go up. Which, in theory, if it was an anti-risk asset, it would be going in inverse. I think the reason why it's rising now is a combination of the sort of factors that I just alluded to: central bank purchases, China loosening up some of its stringent requirements for what some companies can invest their capital into, growing some fears about inflation. I can see how if an oil crisis emerges and we get the prospect of stagflation, which is the worst, because if you have demand pull prices, or if you have a demand pull dynamic where you have oil prices rise, that's much better than a supply shock or a cost push. Because if you're having oil prices rise as a function of demand, that means, oh, that's great. We have a healthy economy that needs a lot of oil in order to power it. But if you have consistent demand, let's say, but a shock that tightens supply, that's bad, because then you're going to get inflation, and then eventually you're going to get weaker growth, and then you can get into stagflation, which is every economist's worst nightmare. I could see under those conditions gold becoming much more attractive. Ongoing talks about the debt, and I know the big beautiful bill was a big point. There was some really weird stuff going on with U.S. bond markets and
Oh
the
yeah.
dollar and S&P and the S&P, where I thought, interesting. This seems like a bit of a change in versus previous, let's say, policy fluctuations where we were talking about the debt, and it was always kind of, okay, yeah, that's an issue for another time. But in my view, it seems that it's not just headlines, but price action is beginning to be reflected, or those concerns are being reflected in price action. And that's, I think, where they gain legitimacy. Because if you can have, because you can have a story and you can have all these facts, you can have all these concerns, but if the market doesn't move, then the market doesn't care. If the market starts to move off those concerns, then that means that they're legitimate and merit more inspection. I don't think it's the overwhelming force driving gold, but I think it is one that is slowly creeping up and may become a bigger part of what you might call the basket of concerns that is pushing gold prices higher. But I'd really be actually really curious to hear your perspective on this too.
I love that you brought this up because it's something that I did some research on recently. So somebody mentioned like, hey, this scenario, I think it was April. Basically, the scenario in April where stocks went down in the United States and what else did the bonds went down and the
Yeah.
dollar went down. And they mentioned that that scenario hasn't happened in a month in the last 10 years. And so I was like, oh, that's interesting. So I looked at the year. I kept going back further. I kept going back further. Hasn't happened since the 80s. So that's it's something
Wow.
that's very interesting because around that time is where we started to see money flow internationally as well. And that kind of fueled that major move that started happening in the commodity space,
Mhm.
and gold, especially in 2000. Basically, it was 1999. Oil went to under $10 for a second. It was like, everybody was like, it's the end of oil. That's it. Oil's dead. Oil ends up going up, for the next, I think it was up 500% or something crazy since until 2008 and made its all-time high at that point. So it was like the best buying opportunity for oil just about ever. And so I'm just kind of looking at all these and going like, there's kind of this exodus of money going out of the United States. Now, do I know if it's going to continue? I have no idea. But I know that something's kind of interesting here. I think, but also look at it this way. This is what I kind of tell people when I talk about this thing. We're looking at 2000 to 2008. It wasn't that the stock market in the United States went down. If you basically look at '03 to 2007 at the peak, we're looking at about a 70 something percent gain in the S&P 500. However, during that same time frame, if you look at South America, it's up 600%. You look at China, it's up 300%. So basically, you're looking at the international stocks moving like crazy. Oil from 2003 to 2007 was up around 300% too. So it's like, and gold just took off, never really looked back until 2011. So once again, I wonder if we're kind of in that scenario right now where we do have the ingredients for an inflationary style environment. But I don't think, for me, if I see global stocks moving up, I'm not too bearish on the United States. I just think it might underperform for a little bit, which would be totally normal. It's been the outperformer for forever at this point. So I think it's just something to continue to watch, continue to pay attention to, and should be on everyone's list to just, hey, there are some moves here in international. These don't happen all the time, and maybe they can happen a little bit more going forward. So, all right, guys, that's it for the show today. If you guys want to check out the Gold Rush, make sure to check out Gold Rush. We are here. Sam and I are always putting out great information. For you guys who are Gold Rush subscribers, you guys know Sam and I have been putting out great trades day after day. Lots of money is getting made right now because basically you want somebody who understands the commodity space if you're going to be in that space. We make it easy for you guys. So hopefully you guys can check that out. And we'll talk to you guys soon.